What's up, guys? Welcome back to another episode of What Not to Do Wednesday. Today, let's talk about credit, man. Not that I have this happen on a regular basis, but it does happen. What not to do? Don't apply for a mortgage if your credit score is in the 400s. Why? Why do people do that? Look, if you know you got bad credit's one thing, but if you can't make your payments on time and your payment history, like everything you've ever had, is late, don't even worry about applying for a mortgage, okay? First thing you need to do is stop the bleeding. Get a job that's stable where you can pay your bills on time. That's kind of the first step. Then go seek professional help with credit repair. I have helped hundreds of people in that situation with bad credit overcome, but usually they're past the event that caused them to have the bad credit in the first place, meaning now they've got a good job, they're stable, they're back on their feet, everything's going well. So listen, if you've got bad credit, you have to have a few things to overcome that. I can do credit scores down to a 500, but listen, here's the circumstance. If your credit score is below a 620 or whatever other lenders' minimum credit score is, you got to have things called strong compensating factors. Let's talk about compensating factors real quick. First thing you're going to need is you're going to need a good explanation on why the credit lates happen. I got laid off due to COVID, illness, divorce, I don't know, something that was out of your control happened. That's probably, and if it's a one-time event, that stuff is usually easy to overcome. Now, strong compensating factors, I can go back to the underwriter and I can say, hey, they got bad credit, but they had an excellent credit history before this event happened, or they have really conservative use of credit. That's why their credit scores are low. Very minimal consumer debt. That's why your credit scores are low. Hey, you know what? Got low credit scores, but I got a really good job. I've got over 24 months with my current employer. That's considered a good compensating factor. At least 2 months worth of liquid assets in the bank. Listen, no money in the bank and low credit. You probably got high debt to income ratio. Let's not even apply for the loan. Let's get all this stuff fixed up first, okay? You'd be surprised how many times I see it. Sizable down payment is another good compensating factor. If you're putting down 5% or more, they consider that a strong compensating factor. Another compensating factor could be minimal payment shock. What payment shock is, if you're currently spending $2,000 a month on rent and your new mortgage is going to be $2,000 or less, guess what? You don't have any payment shock. That's a strong compensating factor. Also, another compensating factor could be military benefits. So if you're receiving any kind of military benefits compensation, that could be counted as a compensating factor as well. So hopefully this was educational and beneficial to you guys.